This is a webinar on how to catch a last tick entry and what a last tick entry is. So we always talk about last tick entries when we're trading, and the last tick entries are pretty much entries that we take within trading that don't experience any drawdown, that never really see spread. The second that you hit the trade, it instantly goes into profit and runs to your take profit. That's what a last tick entry is. It's a trade that you took that experienced no drawdown. When you executed it, you were instantly in profit, hence pretty much making a risk-free scenario for yourself all the way until the take profit of your desire. So what are the key characteristics of a last tick entry? Number one is you need to be able to analyze price from a higher time frame down to a lower time frame. Number two is understanding the risk that you're putting on the entry and the take profit and how much it's going to yield in regards to your trade. So the last tick entries that we take as a team, we're looking for anywhere from a 1 to 5 to a 1 to 30 risk to reward on the positions that we have. I'm going to show you exactly how we analyzed price this week, and we were able to capitalize on a last tick entry all the way to the weekly take profit level that we had highlighted from early on in the session. So I'm just going to jump into price over here. I currently have NASDAQ E-mini March 2024 contracts on the screen on the weekly time frame. So we had a weekly inefficiency between here and here in price. We had a drop down on the opening of the year into this area, but the body of this candle closed within the inefficiency. So on the weekly time frame, I can anticipate that as long as we hold this inefficiency and leave this area, the market is going to continue on up to higher prices. Clear buy side left behind over here. We have liquidity built up above this high. So if we can start accelerating above this weekly candle, then we're going to start accelerating to the upside. Obviously, this week has painted up, but this week is not being considered in the analysis that I'm providing you with right now. We came in to this candle. So on the daily time frame, I had an inefficiency between this candle's wick and this candle's wick, which Friday tapped into and closed a small doji. So I'm anticipating that as long as this candle's wick can hold, then this next candle accelerates on up, then these prices should carry on to higher prices. Obviously, Monday is a low risk day. I don't want to come in and risk heavily on Monday, even if I have an anticipation for where price is going to go. So we didn't participate in anything on Monday, and we had a bias and the direction and everything in our favor coming in on Tuesday, which is this day right here. So I'm going to jump into the 15-minute time frame, and we're going to talk about how it's set up and what everything did at those price points. So Monday, we have a liquidity grab off of the daily fair value gap. Price drives up, and we have a strong bullish close outside of the weekly inefficiency. This big gray box is the weekly inefficiency. So Monday price's daily candle closes above the weekly inefficiency. We have clear liquidity built up off of levels on the left-hand side over here, over here. So how do I anticipate a move if I'm coming in, seeing the Monday play? Where is prices going to go the rest of the week? So whenever I see a high, especially on a big daily candle, bullish candle, I'm already anticipating that this daily high needs to get ran out on the new daily candle if it wants to flip and run to the downside. However, when we came into session at 6:30, it was about this area over here. So we left clear buy side liquidity from Monday high, which gives me a clear target and a possible daily close that's going to close outside of the weekly inefficiency, indicating higher prices and liquidity sweeps off of levels to the left-hand side we have equal highs up here, we have equal highs right here. So there's clear liquidity built up on the left-hand side, other than what we're seeing on Monday with a strong bullish close. So we're going to dive a little bit deeper into this area. So when I come in on Monday, I see 6:30 candle opens after tapping into a 1 hour FVG over here, highlighted in yellow, pushes up, drops down, sweeps these equal lows on the 1 minute time frame, which is the 6:30 opening candle. So anyone that went long on the 6:30 opening candle, their stops went in below that candle, they get stopped out. And then we have two FEGs marked out on the 1 minute time frame over here that we could use as potential inversions to go long. So we know that we have liquidity built up here, all the way up here, but price is over here. So I'm anticipating that if we could get a last tick entry from these levels to the upside, we're going to be chasing this, which is about 100 handles away, and that's going to be my first take profit. So coming in, looking at it, 6:30 open, equal lows left behind right here, pushes up, drags back down. Inefficiency created between this candle's wick and this candle, mark that out, extend it out in time. Another inefficiency created between this candle's wick and this candle right here. And you see a lot of rejection from these candles. So the candles are telling me a story and a narrative. I see that this side pushes up, and if this was to be a short, after this candle dropped down and this candle dropped down, this next candle needed to drop past these wicks. It didn't. It pushed up. The following candle had a drop, recovery. Following candle tapped into the 25% of this candle's wick and rose up again. So now we're in the next area. The next area breaks out, confirming a 5 minute candle close above both inefficiencies left behind on the 1 minute. So my next anticipation would be to see price drop down into the inefficiencies and use it as an inversion. So we shorted first, and as an inversion now it should long. So once I see this strong bullish close on this side, this is the candle that we're going to be examining for the purposes of this recording. So how do you catch a last tick entry? So if everything that I'm saying is true in my analysis, where I'm anticipating long on the higher time frame to trace weekly levels to the upside, we have weekly inefficiency that's broken out from the daily candles on Monday high left in place, 15-minute liquidity over there, then this should be the final spot that price is at before it accelerates into the direction that I needed to go all the way to the take profit. So how would you pop in this entry and experience no drawdown on your position? What you would do is you would come in, identify this wick. That's number one. Number two is I had a strong bullish close and I don't want this candle to break over here. Number three is if this is a strong bullish close and price closed over here, then I need some sort of rebalance into this candle's wick over here in order for price to start accelerating to the upside to chase these highs right here and the highs that we had on the left-hand side on the 15-minute and daily time frame. So this next candle opens and it drops down. When it drops down, the candle looks like this. And then it recovers with the wick and starts painting up. When this candle at the beginning half of the candle drops down, you have to anticipate that the second half of the candle, since there is no wick to the upside, needs to create a wick, which is in the direction of my liking. So if I want to get a last tick entry, the best possible place for me to put on a position is when this candle passes its open and starts printing bull. So when this candle drops down and it's a big red candle coming into this wick right here, I want to see it start accelerating to the upside from there. If my anticipation is correct, then something like this is going to happen. So I put in a buy stop right here, so that whenever it flips and it starts accelerating in my direction, I'm instantly getting triggered and going into profit to where I need to be. That's a last tick entry. Because if that's the case, then my entry would go in right here, and price should never return back there. For risk measurements, I wouldn't want to see it pass this wick, so my stop loss will need to be right here, right below where that bearish candle's body opened. From there on out, acceleration to my side, the buy side, for liquidity. And as we zoom out, we can see that I lost my mouse, I know. We could see that price never returned back to that entry and made it all the way to our take profit level on the week. So we got a 1 to 20 trade on this with the 8.5 handle stop, never experiencing any drawdown, and the full acceleration to the take profit we had marked out on the week. So what's the power of being able to take a last tick entry? Especially with a tight stop loss and correct risk management, you can use this method to flip accounts, but you need to do a full top-down analysis from a weekly time frame all the way down to the 1 minute time frame, like what I just did, and understand that that point that I'm entering at, it should not return back there, especially when you have a 5 minute candle close like this after you have boom, boom, boom. That's it. Shouldn't come back, because between here and here is the inefficiency. My entry is over here. There's no reason that we should pass this inefficiency if this is the spot to long from. You can see the full acceleration on the 5 minute time frame over here. Close to a, what is this? 165 handle run. And eventually continuing to way higher prices up here and more. So in reality, we just caught a 1 to 37, and that was a full 320 handle run. So if you like this, and you understand last tick entries, you understand how powerful they are. Basically, you can risk 30% margin on these trades, and even if you take that stop, you got, you know, if you're running a 1 to 37, that means you could take 37 hits before, you know, your account's toast. So take last tick entries, manage your risk as it's running in your favor, manage your position, run the break even. Once you realize it's not coming back there, let it run in your favor, capitalize on the opportunity, capitalize on the move that you just caught, let the runners be, leave a position on if you think the weekly close isn't going to come back there the following week and it's going to keep accelerating in your direction, and start to swing trades off the 1 minute time frame with no drawdown into weekly, monthly plays for 1,000 to 3,000 handles. I hope you enjoyed this recording. If you like this video, please give us a thumbs up, hit the subscribe button, and we'll catch you next time.